Going one step back, or maybe two and three, the story behind DHT, the vision of the company, the way you entered it. Now we have spent a lot of time talking about the market, so I understand that we can't take the full story here, but just for context, people are tuning in because it's in my opinion, a very great story of a company who has, been able to deliver and become a very respectable tanker company. But I know there's been several steps along the way, but how would you like to share, the company history and how you got involved?
Sure, that's a good, interesting question. So I've been in this business for 35 years. DHT was founded in 2005, and not by me. It was founded by a US public listed company called Overseas Shipholding Group, which later filed for bankruptcy. But they wanted to build up a leasing company, maybe not too dissimilar to what Frontline did when they built up ship finance. So they created this vehicle, dropped down 7 ships into the company and listed it in New York. And I think at the time they owned 40% of the company. All the ships were operated by OSG and they were on charter back to OSG. And it was sort of an all payout model. So it was a base rate with fixed income for the company plus some variables for the market. And then investors had a full payout model. If my knowledge is not incorrect, I think the company didn't really have amortizing debt to the extent that DHT has today, and it paid out all of net income. And when you have depreciating assets and non-amortizing debt, at some point you sort of meet a challenge. And then when the financial crisis came in 2008, and asset values were changing, income was changing, a lot of things were changing. It put the company in a bit of a rough spot. So they had to raise some capital. They had to change the dividend policy and all of that. And the company got significantly repriced in the public markets. And in March 2010, then the CEO, since the listing, left the company with immediate effect. So then take a couple of years, sideways or backwards. I met Trygve Munthe, my now retired business partner through many years. We met some 20 years ago, met through some common friends. And both being in shipping, you start to talk about the industry you're working and discussions and, met some other occasions. And we realized quickly that we had some appreciation and ideas about what it takes to run a successful shipping company. We both worked and been CEOs for many other companies, good companies, and watched also from the sidelines things not go so well in some companies. So we sort of shared some core philosophies of what it takes to be successful. Then when the financial crisis came in 2008, I always had it in me that at some point I wanted to do something on my own if I had the opportunity. So Trygve and I started to talk about, if we should do something together, and which we then agreed to in the fall of 2008, I think it was. And then we left our respective jobs in 2009 and set up a small office in Oslo, a very humble office, rented a small, space with 2 IKEA desks and, 1 fixed telephone. And we didn't really have a 100-page business plan, but the plan was to look for opportunities that normally comes out of a crisis, like the financial crisis, because, financial markets collapsed, order books for shipping was 50%, so, there's going to be a lot of opportunities, we thought. And we had a bit of savings, and we were willing to sort of deploy that capital. So we looked at one opportunity in 2009. We made a bid for this opportunity. It was a company that was, due for some sort of restructuring with the bank, too much debt and the usual stuff. We didn't get this company on price. There was another bidder that was willing to pay much more, and we were sort of, that was okay, because we thought our price would be a good deal. Paying more would not be a good deal. We then entered into discussions with a private equity firm. We had basically put all of that in place. They were willing to back us to build a new company from scratch, and we will be shareholders, and they will provide some additional capital and all that. But this happened at the same time where we saw the stock market notice from DHT that the previous CEO was leaving with immediate effect. So this made us curious because we didn't know DHT really. And so we looked up on the company and we found this company listed on the main board in New York, smallish market cap, had 9 ships in the water, all on fixed contracts to another US listed company, had 1 employee, which was the CFO, and 1 lending bank. And we said, heck, this company is potentially, our company 5 years fast forward. So if we could sort of get involved in this, it could be sort of a great platform to build on. So we took our savings, we bought stock in the open market, and then we wrote a letter to the board, very friendly. We knew some of the board members, and wanted to introduce ourselves as a new prospective management team to run the company. But we also said that we want to build a different company compared to the business it had been, more of a leasing business. Our ambition was to build a traditional ship-owning operating company servicing the industry, i.e. oil companies and refiners. So, obviously we came to agreement. The board was also working, I think, with a headhunter to look for, a management team and whatnot. So we joined the company in the fall of 2010 and started immediately to implement our plan. So the first hire we made was our technical director, and he's still with us. Great guy, I think, super hire, and he's a partner in the business, and so he's with us still. And we started to sort of, grind ourselves the way through all the material in DHT and whatnot. But it took us some 2.5 years to sort of put the company's, I wouldn't say all of history, but some of the stuff we had to sort out behind us. And in particular, OSG, which was the only client of the company at the time, filed for bankruptcy, and some of the cash flow in the company disappeared. So, luckily we anticipated some of the problem this company could get into. So we raised a little bit of capital to ensure the company would still stay alive and, survive such an event. I think in the spring of 2013, there were sort of, all the stuff was behind us. I wouldn't say clean sheet of paper, but we had a company then that was public, didn't have any noise with this prior company. Our balance sheet was sort of okay, but the market cap was small. I think in the summer of 2013, our market cap was 60 million, 60. It's a tiny company. We felt in a way at that time it was an up or out situation. So either we really have to step on it because we were very bullish on the market, or we had to try to take the company private with the few ships that it had. And we decided the former. So in the fall of 2013, with the support of the board, obviously, we then ordered some new ships and we raised capital. We then managed to acquire a couple of 3 distressed ships that were arrested by banks. We ordered another few ships, and then we did a big M&A. We bought in the second quarter of 2014 a privately owned company with 7 VLCCs. So in total of 9 months, we bought 16 VLCCs, which is, and from a 60 million market cap to this, I tell you, this was not easy. It was very, very difficult, but we managed to pull it off, and so it was a super proud moment for the two of us in 2014, having suddenly then a sizable VLCC fleet, and with the acquisition of this company also came a full technical operation, and so we starting to become a fully integrated company. That was our longer term ambition, but it happened maybe faster than we could ever imagine, right? So we stopped investing then in the fall of 2014 in anticipation of a strong market, and it was sort of going into harvest mood and try to make as much money as we possibly could on then the fleet that had become sizable. We started to pay dividends, with a meaningful order to shareholders. We used excess cash flow to prepay debt, to invest our balance sheet, but stayed sort of quiet for a while. And then in 2017, we felt it was a time again. And we did another stint. We ordered 2 new buildings, But also importantly, we acquired the VLCC fleet of the BW Group, 11 VLCCs. So we bought this fleet from them with the consideration of a mix of cash and stock. Hence, BW became a shareholder in the company, and they're still a shareholder in the company, although percentage-wise smaller than what they were at the get-go of this transaction. So this, of course, built the company over the years, and to now become a force in the VLCC space. And then we've done, smaller acquisitions and some disposals and stuff like that over the years. But these are the sort of two big events in, getting really size in the company.
That's an incredible story. I have so many questions, but to start with one, is there any way you can describe how important the partnership was with Trygve and how you functioned as a team? And, would it be possible to do it alone, or do you think that partnership was so critical? Because like you said, this is not a simple journey just based on timing and then everything solves itself. This is hard work.
I think it was a fantastic partnership. He's a super guy, a very good businessman. I think there's many good things with this. I think you need to have a partnership to work like that, where you are equal. You need to possess a couple of things. You need to have great respect for the person you work with, and you need to also possess a fair amount of generosity so that you can give each other space, at the time. And sometimes that is not so easy, but but it's part of the things that make it work. And of course, you need to have some, contributions both, but you need the base principles. So how you think this business, what are the success factors? You need to agree on those. I think the other thing is that, sometimes when you are a CEO, you're not always 100% certain that the people that work for you will always tell you the truth. They dare to be honest with you or disagree with you, for instance. When you have a partnership like this, you are on equal footing, and you can have, really, you're confident that there's no nonsense here, right? We're in the same boat together, we put the same amount of money to work, and we are equal. I think in all this process of doing that, and in exchanging ideas and, how to attack sort of the challenges or problems or make things happen, this was very, very good. And I dare suggest, or shouldn't suggest, some people have suggested me that it will be hard to replicate this. Trygve retired now, I guess it's almost 3 years ago. So I always knew that he had an ambition to retire maybe at an earlier age than what I have. So I've been sort of prepared for that. But in this process, also as the company has evolved, right, and developed, we have a very strong management team under us. So in this transition, previously Trygve and I, we were sitting in the same room with desks across each other discussing everything. And I guess we were sort of throwing the balls back to the team when we make decisions on what to do, please help fix this stuff. Now it's maybe more a traditional management structure. So these three, directors are now part of a management team. They, we all attend the board meetings together, generally. So they are a very capable team. And it's great that they now got the opportunity to take a step up and be sort of really on the management board of a company and being involved in truly running the business. Take part in investment discussions, strategy discussions and stuff like that to a greater extent than maybe what they did in the past. So, every change creates, creates the need to make changes, and this is how we dealt with this. So I think both is now equally important in a way, and there's a time for everything, right? But he's a good guy, and